Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. A quick glance across Asia. Remember, the rest of the globe is a slightly better place this morning. You've got some comments from Trump saying that he's looking at an interim deal with China that's keeping, excitement on its heels. You've got Nikkei 225, which is up about almost 1%. So is Shanghai. Hang Seng marginally higher in the green by about 0.2%. For the SGX Nifty, pretty muted this morning. Down by about 1.5 odd points. It's going to be interesting to see whether or not this 11,000 mark that we've been hovering around for so long can get taken off meaningfully either on the upside or the downside. Bets.
Yes. There's ammo for the bulls, but the SGX is not quite showing that. Let's see if we indeed start off higher. The CPI, IB and all the other factors should help.
Yeah, and we'll get in a discussion going on how meaningful this is with regards to the expectations around RBI's rate cuts coming up in the month of October. But that happens in just a few moments. For the time being, let's also look at the derivative space and what are the cues that we're getting out from there. Navneet is joining in with that. Navneet, good morning.
Good morning to both of you. Well, we did snap the 5-day winning streak, at least on Nifty yesterday, but we also defended the 20-day moving average of about 10,960. So probably that's the level on the downside you can watch out for today's session. But on the Nifty futures, we did see some bit of OI addition, almost 2% higher. Premium came off to about 13 points, and Bank Nifty, which managed to close marginally in the positive territory. There was some cash-based buying definitely seen for a couple of these financial stocks, but open interest went down by about 10%, telling you some positions were being unwounded in yesterday's session. But the premium came off quite significantly to about 5 points compared to 50 points, which we had seen in the previous session. The volatility index, though the markets came off, that also came off. In fact, yesterday, India VIX closed below the mark of 15, which is a comforting sign now for the bulls. 14.9 down about 3%. For the next weekly expiry on Thursday, what's the range you can watch out? The maximum open interest concentration, it is at the 11,100 call strike and the 11,000 put strike. So looking at this, you'll think the range is quite narrow, but 11,150 remains a very big resistance for Nifty on the higher side. And on the downside, first you can watch out for 10,960. That's the 20-day moving average, which we defended. But yesterday, if you look at the 11,000 both call as well as put strike, they were quite active. Both did see some bit of OI addition. If you combine the premium of both these strikes, if somebody was to play a straddle, it's about 150 points. So that's another range probably you can watch out on the downside or on the upside. Very quickly then, on the stock futures side, which were the stocks which were active in yesterday's trade, Interglobe Aviation touching all-time high levels, fresh long position seen on the futures side. Apollo also touched all-time high levels, but it came off from those levels. Finally, towards the end, the stock ended in the red, and you did see some shorting coming about. United Breweries saw fresh shorting, and India Bulls Housing, which was your top gainer on Nifty, saw short covering in trade. And very quickly on the index futures side, though the FIs bought on the cash side, on the index futures, there were more of short positions added to the tune of about 15,779 contracts. With that, it's back to you guys.
All right.
Maybe they say short covering, then there is some short covering led moves, up moves might also come in, and maybe the macro data will aid that.
Yeah, hopefully, fingers crossed for that. But you really don't know the pulse of the market right now and what can move it and what can't. But talking about the macro data, urban food prices led retail inflation to a 10-month high, while industrial production grew at the fastest pace in 9 months. Does this indicate a revival from the 6-year low of GDP growth? Let's break it down with Aditi Nayar. She's the principal economist at ICRA. Aditi, thanks very much for taking out the time on both these variables. What were your initial thoughts?
Thank you. Good morning. Well, certainly the IIP data did come in higher than expected, and that had happened in the previous month as well. So that's a little bit of an interesting sign. However, I must say that after getting a higher than expected initial print for the last month, we ended up getting a substantial downward correction yesterday for the month of June. And on top of that, we now got a 4% plus growth in the month of July. So on the face of it, while it seems to be a pretty substantial recovery, and it was also broad-based, 5 of the 6 use-based categories did show a better performance in July as compared to June. But I think we do need to treat this data with a lot of caution, because some of the high-frequency indicators that we have for the month of August are actually quite worrying. And that basically, what I'm referring to is the fact that Coal India's production has actually contracted by around 10% in August as compared to around 5% in July. Auto production, we've already seen the numbers. We've got an 18% contraction in the month of August as far as the production is concerned. And not really clear on the visibility in terms of when these deep production cuts are going to end. We are getting pretty close to the festive season, so if we're going to continue to see these production cuts, then that's going to be a worry. Of course, the base is going to start to be supportive for auto numbers from about September, October onwards. And the third cause of concern is that even electricity generation has contracted in August by a very mild extent. But having said that, I mean, we're really not used to seeing contractions on the whole as far as electricity generation is concerned. So I would actually look more at the initial data that we have for August and not get too enthused by the IIP data for July in terms of really looking at how to forecast Q2 GDP and GVA growth. So just going back a little bit, the biggest factor that led the, our forecast for GDP growth being so far away from the 5% number which came out for Q1 was manufacturing. And I think even now, looking at the various pieces that we have, it is difficult to conclude that we're going to get a major revival in manufacturing GPA growth in Q2, other than just simply the base effect becoming supportive.
Right. Right. Let's also talk a little bit about the inflation numbers, the CPI data that came out. Food inflation remains, somewhat benign. But going forward, what is your expectation of the trajectory of inflation? Do you see it going above 4%, particularly on the back of normalization of food inflation? And therefore, in light of that, what would the projections be in terms of what the RBI could do in the form of rate cuts?
So as of now, food inflation is evolving along our expected trajectory. It is rising partly because of seasonal factors like the flooding-related increase in vegetable prices. And we do think that the overall scenario as far as the late surge in monsoon and the pickup in kharif fields are actually only going to be optical for the near term in terms of being beneficial. Broadly, don't expect the late surge in monsoon and the related flooding to support the kharif fields, but what it is likely to do is to be beneficial for the rabi crops going forward. So as of now, I would expect that food inflation would continue to harden in the near term, and that is something that would put some amount of upward pressure on the headline inflation number. On the other hand, as far as the core inflation is concerned, it came down only by 2 basis points in August. And really, we do think that the composition of the core CPI, which is heavily dominated by services, is something that would remain quite sticky even during the slowdown. So to some extent, I would expect that CPI inflation will continue to rise slowly but steadily over the next few months and possibly, come near of 4% or maybe around late Q3 or Q4. But on an average, we do expect CPI inflation for FY20 to remain at around 3.5%. Given the fact that there is no clear visibility on an upturn as far as the growth slowdown is concerned, I do think that we will get another rate cut in the October LPC review, and possibly 25 basis points is what we could factor in at this point in time.
Okay, Aditi, thanks so much for taking the time out and speaking to us this morning on both of those factors. So inflation did not, actually marginally off than what the predictions were, and therefore might aid the rate policy any which ways, as well as the IP data. They're not quite enthused, even though there have been 2 months now of an uptick. Is Rusmik enthused by all that's happening around for the markets? Senior Vice President and Head of Fundamental Research at Kotak Securities with us. Rusmik, good having you. Thanks so much for joining in. ECB macro data, just the last 5 days of a movement. Are you more bullish than bearish right now, or would you take some caution right now?
Good morning, Neeraj. I think things are turning positive, especially from both international news flows as well as whatever numbers are coming out on the domestic side. Especially, 2-3 international cues have been very good. I think we can see a risk-on rally in emerging markets, and I think India will also participate in this move because we've been seeing some course correction and corrective measures coming from the government also. And the biggest positive what we're seeing from a local market is rains have been very good, especially in the southern region, because after many years, we've seen good rains in states like Telangana, Karnataka, and parts of Kerala. I think southern region from a rural perspective has been lagging last couple of years, and for last 2 years on a broader basis also we had a subnormal rainfall throughout the country. This year maybe the first half will not be very encouraging because of flooding effect, but the second half, maybe from March quarter onwards, you could see rural incomes going up substantially with good output, good realization, because we could see food prices going up on the basis of shortfall of some of the outputs which will come from Kharif. So overall sentiment I think seems to be turning positive. Another broad indicator we monitor is we have seen a lot of mid caps going up between 10 to 25% from the recent 52-week lows. That also will lead to give little confidence for investors to come back into the market. I think from the earlier range of 10,600 to 11,500, 600, I see upside first, and probably then maybe once Q2 results come, then the negative impact of earnings could again drag down. But as of now, I am expecting at least Nifty to go up to around 11,500 in this move by end of September or by early October.
Okay, so Rusmik was a lot more bullish than bearish. What about specific pockets of strength and weakness? We'll talk about that with him in just moments from now. First, let's go across to our research team to try and figure out precisely this, the companies that should be in focus. We've already discussed Tata Motors and the annual report takeaways. There are some key stocks in news and some brokerage notes as well that have come out. As we've been saying, lots of brokerage initiation reports or otherwise. So Nikki and Darshan join in to talk about that. Nikki, to you first, the stocks in news.
Well, a couple of them, but then I'm going to start off with pharma stocks first, where Dr. Reddy has received an establishment inspection report from US FDA indicating the closure of the audit for Vizag formulation plant. That's a positive coming in for the company, given that the US FDA had issued a Form 483 with two observations for this plant earlier. Biocon, which has entered in pact to sell 3 generic formulations to China Medical System Holdings, and Infibeam Avenues, which is going to be demerging 2 of its subsidiaries which hold the e-commerce business and will be listing them at a later date. Power Grid Corporation, where the company has been declared successful bidder for 2 transmission projects both in Madhya Pradesh and Rajasthan, and the same story continues for DHFL, where it's defaulted into the payment of NCDs and its interest worth around 195 odd crore, which was due on September 12. Do keep an eye out on Manpasan Beverages, given that there is the CMD has not approved any forensic audit and call options, which was he said that was not a part of the earlier agenda, and also alleged that the company's financer, are trying to pass this resolution with malified intention. PI Industries, which has executed an offer for execution of 100% for acquisition of 100% stake in an Italian company. The transaction value is to an extent of around 345 crore, which is net of cash and debt, and this transaction is expected to be closed by Q3 FY20.
Okay, we'll watch out for some of those names, Nikki. Thanks for that. Darshan, brokerage notes, thick and fast, which is the one that is standing out?
Yeah, so Goldman Sachs, 2 upgrades that they've done, one on Motherson Sumi and the other on Shriram Transport. So first, Motherson Sumi, what they've done is from a neutral to a buy, and the target price has pretty much remained the same, 121 versus 124. And the drop in share prices have got down the valuation, and that is why they have upgraded Motherson Sumi. They're saying that the ramp up of new plants and execution of new orders will aid earnings for the company, and the normalization of commodity prices will aid the companies also as far as their margins are concerned. They're saying that the improvement of profitability at one of their key subsidiaries, that is SMP, will be led by lowering losses at the plants. The other one is Shriram Transport, in which the upgrade has become from a buy to a neutral, and the target price has been raised to 1231 from the earlier 1155, and they believe that the liquidity crisis is behind us at this point of time. They're saying that the company is well positioned to deliver ROAs close to almost as 2.6% over the next 2 years. Benign interest rate cycle will support the margins for the company. They also believe that the potential support that the government will give to infrastructure will aid the company. And finally, healthy fundamentals of the company in a benign interest rate cycle are good for the valuation and provide significant upside.
Well, thanks a lot for that, Darshan, as well as Nikki, for giving us that perspective. Well, certain NBFCs finding favor. What the RBI has also done is gone ahead and cut the risk weight on consumer loans. Now, obviously, this is pertaining to banks and not NBFCs necessarily. But Rusmik, what do you make of this move? An impetus to some banks with the higher consumer durable or rather consumer-focused loans? Can it move the needle on earnings and stock prices?
No, definitely it's a good move, I think so, and certain private sector banks I think could benefit a lot. Anyways, we've been seeing most of the leading private sector banks like HDFC Bank, ICICI, Axis, and even a bank like SBI, they've been, last quarter their retail book has grown at more than 20%, and consumer durable has been one space which has seen a serious slowdown in as far as lending is concerned. So I think maybe this could come in handy, especially just before the festival season. So that could aid their growth in terms of lending to NBFCs indirectly, and maybe direct lending also looks quite robust for most of the private sector banks. Another maybe we are also anticipating further rate cuts from RBI going forward, which could also indirectly help lending going forward, maybe with a lag effect of couple of months.
Okay, got that. So what is it that you're advising to do right now if you were to start investing, and even if you were to take it as a staggered approach, starting off first, what would be your initial bet? Would it be consumption, be safe, or start looking at high beta pockets in anticipation that something might be doled out by the finance minister?
Good morning, Devina. I think we are trying to look at a lot of old traditional businesses as of now. Some of them are showing resilience. Like we like cement a lot, because post this flooding in almost more than 12 states, we could see a lot of resumption of construction activity coming up in a big way, and at certain point the government will also chip in terms of higher spending, maybe sometime between October to March, because last year between October to March the spending of the government was constrained because of elections and because of the fiscal deficit. This year they might have certain leeway because of their out of the way raising of incomes from a balance sheet perspective. We also like oil and gas sector, so in cement, I'm just going back, we like some of the mid cap names like JK Lakshmi Cement, Orient Cement over there. Oil and gas, most of the companies have been beaten down, and I think their demand outlook still remains a little decent enough as compared to the manufacturing activity. So I think we like names like GAIL over there, Petronet LNG, Mahanagar Gas. These companies have shown a decent uptick in the last couple of quarters. We also like certain power companies and power equipment companies also. Though the rate of growth is come down, but even if you see Q1 also, the revenue growth of the top 8 power companies in India has grown up by almost 19%, and prior quarter was also around 19-20%. So I think time has come where growth has been quite robust, but stocks are still languishing at multi-year low valuations in power. We also like ancillary companies to power like transmission companies, KEC, Kalpataru. They also quite looking good. And from a currency perspective, we would bet on certain tier 1 names like HCL Tech Mahindra in the IT space, and few of the specialty chemical companies, SRF being one of them, and maybe you can look at companies like Aarti Industries also in that space. So these are some of the pockets we are playing, because in case of manufacturing, we will steal certain hurdles and growth may not be coming so fast. So maybe you have certain time to catch up coming back to the manufacturing companies, maybe in after a quarter or so.
And we'll talk about SRF a bit later on. There's a brokerage note that has come out as well. Try and distill the reasons that Rusmik has for that. But before that, it's 8:50. That time now for a special segment, Bloomberg Edge, where Yash Upadhyay tells us about pattern that the Bloomberg terminal has thrown up. Yash, what's the stock on your radar today?
Neeraj, we're looking at Bata, and it has been a rank outperformer, but there is weakness which the charts are indicating, and that we could see a reversal in the uptrend for the counter, and we are seeing a bearish engulfing pattern form on the daily charts. The bearish engulfing pattern, as you know, is the formation of a large red candle right after a green candle, wherein the body of this second candle completely engulfs the one ahead of it. The larger is the size of the second candle is, the higher is the evidence of a top forming, and no further confirmation is needed over there. Now, like I was mentioning, in yesterday's day of trade, while the markets eventually ended up flat, we saw that the stock went from week to week, and over the course of the day, it closed significantly lower, and that's the reason why we saw this big red candle yesterday, right after the green candle for the last 3 trading sessions, indicating that at the higher end now there is some amount of weakness coming into the counter, but that is the action as far as on the daily time frame is concerned.
Okay, and what does the weekly chart indicate?
The weekly charts do support, this theory, because if you take a look at the RSI on the weekly charts, while the stock has been making higher highs, look at how the RSI has performed. At the mark of around 1200 or so, the RSI had topped out above the mark of 70, which indicated that the stock was overbought, and then it gave a small correction. It went on to again hit the levels of close to 1400, but this time the RSI made a lower high. And while we are currently trading up close to around the mark of 1550, the RSI has yet again come to the mark of 70, which is the overbought level, and is below the mark of that, so making 3 lower highs and exhaustion coming in at the higher level. So that is another indication that Bata at these current levels could see some amount of correction.
Right, Yash, thanks very much for that. That is Bloomberg Edge for you, and we're talking about Bata this morning. Bringing in our technical experts on the show, then we've got Shubham Agarwal. He's joining in along with Amit Shah of BoBCAPS. Thanks very much, gentlemen, for joining in. Let's start off with you, Shubham. On the index, is there a trade?
Hi, good morning, Deven. If you look at the Nifty was clearly in an uptrend, but after the movement or the placement that Nifty has witnessed yesterday, I think it's entering a temporary pullback mode where we might retest the level of 10,900. So we can't really go short on this because it's just a temporary pullback, and it's very difficult to precisely point out where exactly the reversal will take place. So the strategy will be that avoid any trade right now, but around 10,900, if the Nifty corrects, that will be an optimal level to re-enter. And then one can look at placing a stop loss at around 10,800 with a target at 11,100 on the upside. So for the time being, no trade, but buy on pullback should be the strategy.
Looking at the Bank Nifty and the kind of momentum that it has gained over the last few days, do you feel that maybe if not the Nifty, the Bank Nifty could be looked at? Shubham?
Devina, if you look at the Bank Nifty structure, I think very similar structure is available there, where we had a decent rally on the Bank Nifty, and after a long time, a kind of a doji with a large upper shadow has got formed, which is clearly stating that yesterday was a day where some profit booking was witnessed. Even though net, if you compare it with the close, we might not have significantly ended in the red, but still from the day's high, a lot of profit booking was witnessed in, and especially if you look at some of the stocks like Axis Bank, Kotak Bank, some of these stocks have already entered a pullback mode. So I think one should wait for a pullback to complete, and the right level to re-enter Bank Nifty on the futures will be roughly around 27,400 to 500 level.
Okay. Amit Shah, what about you? Your calls.
Hi, good morning. So I'm more of a view of market is poised for a pullback. A couple of reasons. In the last 5 trading sessions, if we see, the index has taken a critical support from the 10,800 odd mark. We also have seen a good put writing activity happening in those levels. And in the 5 trading days, despite market yesterday out of that was traded with a negative bias. But if you look at the market breadth has been quite concerning earlier, but in the last 5 trading sessions, we have seen at least a 2:1 kind of a ratio where the advances are outnumbering the declines. So that's a positive sign which I will take from here. However, for Nifty, it has been struggling at a key resistance marks close to around 11,050 odd to 11,150. In my sense, on the downside, 10,900 to 10,880 is a very key momentum support. The more it sustains above that, again, the reattempt towards these resistance marks can be seen on the higher side. So with the positive market breadth and the put writing activity which is remaining intact, I'll keep my biasness mainly on the pullback side, not as a trend reversal, but as a pullback side, where my stop loss would be to play at 10,880 odd, and the more it sustains above 11,000 mark, around 11,000 odd mark, the more strength I believe it will add on, where the upside targets can be retested towards 11,150 and from there to 11,230 odd levels, where the 200 200-day moving average is seen.
Okay, Amit, quickly, let's run through your stock ideas as well. You've got 3 stock ideas, so Dabur, GSPL and Voltas.
Yeah, so if you look at the overall rollovers as well as the delivery activity, the stock has been doing quite good on Dabur. The stock has been hovering around 450 odd. I have a good range to accumulate around 450 to 445 odd. On the downside, the stock has a very good support at 438. And the more it sustains above 450, I believe the stock positionally is poised towards 480 to 500 levels on the higher side. Now, if you look at GSPL, there's more of a positional play where overall as a sector, we are seeing a good traction of volume and open interest activity in Petronet. And the delivery volumes in the last couple of weeks has been quite strong in GSPL as well. The stock on a weekly structure has been making a good higher top, higher bottom formation and is almost inching closer to a breakout level. So the more it sustains above 224, a good range to accumulate this counter would be 224 to 221 odd. On the downside, the positional support for the stock is seen at 216 on a closing basis, and sustaining more about 224 to 225, the momentum towards 242 to 245 levels can be seen. And the other is the buy recommendation, which is on Voltas, trading come positional idea, where if you look at Voltas since December 2017, or the stock has been hovering in the range of close to around 670 to 500 odd levels on the lower side. So after this long consolidation, the stock has been witnessing a good volume traction in the last couple of weeks. The stock has a very good support around 620 that will act as a good stop loss level, and momentum above 640 can be considered as a good where the rally can be good for a higher top, higher bottom kind of a structure. And on the upside, I believe the stock positionally can head towards 700.
Okay. Thanks for those ideas. We'll take in Shubham's ideas post pre-open because we are very close to pre-open session. Mind you, we'll also watch out for the kind of movement that we could see in some large cap names. Dr. Reddy's for one, HUL for the other one, and as I said, the belief about what the impact on this one could be split right down the middle. So let's wait and watch if these are a couple of names that could react. And then of course watch out for the auto names as well. They've been volatile at best. Tata Motors in particular, very active the other day, top gainer one day, top loser the other day. So it's been very, very choppy for some of these auto names. Need to monitor what happens here as well. And after the subdued end to the large caps yesterday, the Sensex will be firmly in focus.
Yeah, and also with regards to Bajaj Finance and some of these, NBFCs and banks having a bigger consumer portfolio, with the RBI reducing the risk-weighted adjustments to the consumer loans from 125% to 100%, whether this actually benefits any of them materially in terms of a stock price reaction, that is also something to watch. You've got SGX Nifty marginally under in the session right now. Sensex is up right now about 1/3%, so you are seeing some moves out there. Bajaj Auto has moved up in early morning trade. ONGC, NTPC, Sun Pharma, Axis Bank are some of the other gainers. Reliance Industries moves up, ICICI Bank, ITC. These are the kind of gains that you've got. In terms of losers, Yes Bank, and then you've got SBI marginally under. Yes Bank is up, but that should come off, normalize. That one is down, and HUL and Bajaj Auto are marginally under in the session. For the currency, we're back down below 71, so we're at 70.93. So that's a good enough strength that's come back into the currency. Yesterday's session also towards the end saw some strength in the currency. You've got good macroeconomic data points probably supporting this move as well. So not bad. I mean, the currency at least, and this will aid the equity market sentiment as well.
Yeah, yesterday too active amongst very sharp gain yesterday, and today's session too, like starting off on a good note. What's happening at the broader end of the spectrum? Well, a few names, maybe we would have a reaction. I don't think Reliance Industries will have this reaction. JSPL is looking like it will start off slightly lower, so do watch out for that one. Sundaram Fasteners, one auto ancillary name that has had a really good move the last few days, is also might be active, so let's wait and watch. HEG and Graphite were very active yesterday. Let's see if they react a bit in the session today. And we'll watch out for Dr. Reddy's and HUL and see if there are some reactions thereof. Index names, of course, but do watch out for both of these names. However, we'll revisit these pre-open rates once they stabilize. For now, on to more news. IDFC Securities has initiated coverage on SRF with the buy rating. Yash Upadhyay joins us for a very quick snapshot of the key points highlighted in the note. Yash.
That's right, Neeraj. Good morning to you. So what they say is that they expect the next leg of growth to come in from the specialty chemicals business. Now, they are primarily into three businesses: the chemicals, packaging films, and technical textiles business. But going forward, they expect the specialty chemicals business in particular of the chemicals business to take them forward in terms of the next leap of growth, as they expect the specialty chemical business to grow at a compounded annual growth rate of almost 35% over FY19 to FY21, as well as the strong business momentum in its refrigerant business. As far as the packaging and films business is concerned, they expect a moderation in margins for the current financial year because of the oversupply situation. But from FY22, once their new capacities come on stream, they expect the packaging and films business to also do very well. It is also the largest business in their overall revenues, contributes to almost 33% of their overall business. So that is important there. While their technical textiles business, that was under pressure in the first quarter because of the auto slowdown, there they expect that it would remain consistent going forward in terms of being the cash cow for the business, but steadily it would see a reduction in its share to its overall pie. But clearly the growth momentum is in the back, is in their specialty chemical business, where they have been consistently investing for the R&D and innovation, and they see that the growth would come in from this business going forward.
Yash, thanks very much for that. SRF there, which is up 0.75%, new initiation from IDFC. 2,729 is where it's come at. I think we've got the rates back on the index, so let's just pull up the Nifty 50 and see what it's doing right now. In pre-open, 10,999, so just about hovering, extremely flat right now on the Nifty 50. We've already highlighted the stock moves. I don't think there'll be any material changes to the stock moves on the NSE or the BSE. But getting back to our guests then, and Shubham, we didn't get to take your stock ideas, if you want to highlight that for us.
There are two ideas and both are on the short side, and as the market is entering a temporary pullback, but still we should look for stocks which are still in a medium-term downtrend or has been underperforming. So the first call is a sell call on JSPL, even though that's a contra call to the earlier analyst who spoke about a bullish view. But if I look at the data perspective there, the stock has been an underperformer, and the overall metal sector has been underperforming the Nifty for quite a long time. And if you look at the derivatives data, every time we see that the stock is moving up, the open interest is actually going down. And that is what happened with JSPL yesterday, where we did see a large bounce, but ultimately what happened is that it went off from the day's high and a lot of shorts were initiated. So the net the day was with a long unwinding. So I think this is a good indication that we might be approaching a interim top. So the strategy will be to buy a 105 put option where the risk is also limited. It's quoting at around 3 rupees 15 paise. The target for this call put option will be 6 rupees with a stop loss at 1.5. And the second idea is a short call on ITC. And if you look at ITC, there has been a very big pair trade going on where ITC is moving down and HUL on the other side is making new all-time highs. So I think ITC, the underperformance will continue because the breakdown that happened yesterday will see some more continuation because lots of longs were initiated and after that a breakdown has happened,
right,
which will invite a lot of unwinding happening there. So on ITC, the strategy will be to buy a 235 strike put option, which is quoting at around 2 rupees for a target of 4 rupees with a stop loss at 1.
Okay, coming back to you, Shubham, but let's focus on the news at hand. The RBI has notified one of the announcements it had made in the last monetary policy meeting. The banking regulator has cut the risk weightage on consumer loans from 125 to 100%. So how much will it help banks? Let's ask the Managing Director of State Bank of India, Mr. P.K. Gupta, is joining us on the phone line right now. Mr. Gupta, they announced this in the monetary policy. This has come into effect now. Is this going to substantially improve consumer lending?
I think what it does is, first of all, it improves the capital adequacy ratios of the bank actually. So since this applies on the existing book also actually, so depending upon how much retail book each bank has, I think the CAR will go up. My guess is somewhere between 15 to 20 basis points the CAR will go up. So which means that it overall improves the ability of the banks to be able to lend more. Definitely on the consumer lending side, on the existing products itself, I think there would be some room for the banks to be able to do something. But the fact that, this facility is available for the overall lending position of the banks, I think it's a good sign. As you said, RBI had already announced it and they have issued the circular. So the banks will definitely get benefit. Secondly, I think the festival season is already on. I think we will see some revival of demand happening. A lot of steps the government has taken, RBI has taken. We should see some revival of demand happening in the market.
That was going to be my next question, Mr. Gupta. Obviously, while this strengthens the ability of banks to lend out to the consumers, is there enough demand? Have you seen that trend over the last few months where consumer loans, as a segment is done well in terms of the demand pickup?
Yes, I think the personal unsecured loans, we continue to see good demand for this product. The stress on this portfolio has been very low. I think in some quarters, some concerns have been expressed whether, this portfolio is safe. I think there is no real issue as far as this portfolio is concerned. Some demand, we hope that, this should be able to generate not only on the consumer side, but overall demand itself, I think, is what we are looking at, actually.
Okay.
So
I would reckon that you do believe that this will have an uptick on the consumer loan distribution and of course costs for banks. Mr. Gupta, one follow-up, and that is on the other part that I read, which is that the limits of lending to a particular NBFC or a group have also been relaxed. Quick thoughts out here, sir?
Yeah, I think as far as SBI is concerned, we didn't have constraint on account of that. So they have increased it from 15% to 20%. But I think for some of the banks, it will definitely open up room for them to be able to lend to NBFC.
Right.
See, as you know, that the RBI has also allowed, for the banks to be able to lend more through NBFC, particularly this on-lending solution which the RBI has provided, where for the PSL, we can actually originate a book through the NBFCs also. By means of on-lending by the NBFC. So I think this will open up room for a lot of banks. But as I said, for SBI particularly, I don't think we were constrained by this particular limit.
No, just wondering, sir, all of this plus the consumer lending, etc. I'm just trying to figure out if you believe that it will all help in boosting liquidity during a much needed period of credit for the Indian consumer and the corporate space. Do you think all of this leads to that?
I think liquidity has generally been good. I don't think liquidity has been a constraint. But on the capital side, some banks could have been constrained, so that helps. And secondly, with the reduced risk weight, definitely, it becomes a little more attractive for the banks to do more consumer lending.
Good having you, sir. Thank you so much for taking the time out and speaking to us this morning about your thoughts on both of these moves, more importantly on that aim to boost the consumer lending. So small baby step, but certainly helps, is the view of State Bank of India. As the pre-open rates settle down, and just before we tell our viewers all that they need to know, just look at what's moving around. Yes Bank is likely to start off about 1.5% lower. So do watch out for that one. HDFC Bank may start off lower. SBI itself likely to start off lower. So there is also a credit event of sorts that has happened. There's an NBFC which has defaulted with higher exposure to some of the banks or higher exposure from some of the foreign players. So do watch out for that one, real estate focus. And amongst the broader end of the spectrum, there are not too many movers, but ITDC, Z-Learn, and maybe Lakshmi Vilas Bank are amongst the stocks that are moving well. But Rusmik, as one quick question to you on SRF, you mentioned that there is a brokerage note out here bullish as well. Is that the best specialty chemicals play, or do you like something else within that bucket?
Our preferences, if you have the top three names in the specialty chemicals, we like Aarti Industries, SRF, and there's one more company we don't track. It's called Deepak Nitrite. All of them look good. The entire specialty chemical segment is looking very good because now India has become an alternate reliable source of outsourcing for most of the multinational companies because of the trade war and chemicals being hazardous. India has actually built a very credible track record as compared to other emerging markets which more are grabbing market share on the electronic export side. So in case of particularly SRF coming to, we track the company, we're expecting earnings to grow at around 27% CAGR for the next 2 years. ROE will be very good at 19 to 20%, and even if you give a a sober multiple of 15 times. We have a target of 3,400 in the stock. Still a decent 20-25% upside even from these levels. And good thing to note is most of the specialty chemicals are defying the slowdown and growing because of their ability to grab more market share from China. And most of the players have reported healthy Q1 earnings, and most of them will report around 20-25% earnings CAGR for the next 2 years. So if we keep all this in the background, I think there is a smart case for re-rating for most of the specialty chemicals, similar to what we saw over the years in CRAMS. Like today, Divi's Labs trades at around 30 times, and most of the specialty chemicals are still trading at 15 to between 13 to 15, 16 times. So there is a room for they getting re-rated and going forward after 1 year trading at 18, 20 times. If they have a ROE, ROC profile of say 20% plus kind of a range going forward.
Okay, Rusmik, appreciate you taking the time out and joining us today and giving us your thoughts. Thanks so much for being with us today. We're minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Dr. Reddy's receives EIR from US FDA for formulations unit in Vizag. The drug regulator has issued a Form 483 with 2 observations in June 2019.
Biocon licenses 3 generic formulations products to China Medical System Holdings.
Power Grid Corporation declared successful bidder for 2 transmission projects in Madhya Pradesh and Rajasthan.
1% Beverages says no forensic audit and call option proved by Chairman and Managing Director Dhirendra Singh. The company alleges that resolutions were passed with malified intentions.
Lastly, IDFC Securities initiates coverage on SRF. As we were talking about, the outperform rating, the brokerage has set a target of 3,347 rupees per share, considering SRF's dominance in refrigerants and specialty chemicals. Well, I'm told Deven Choksey is joining with us as well, but we are less than a minute away from, or almost just a minute away from market open. So good time to probably get in the top 2 calls from both our derivative experts. Amit, I'll come to you first. The one stock that you'll bet on today.
Yeah, so before I just recommend on the stock, I just want to make a correction for the viewers' benefit. Shubham quoted on my recommendation, which was on Jindal Steel. I do not have a buy call on Jindal Steel. The buy call is on GSPL, Gujarat State Petronet Limited. Well, coming to the idea, I would stick to Dabur if I have to pick out of the 3 one stock in my recommended list. So Dabur, I would go ahead with a trading stop loss of 438 for 475 to 480 targets.
Shubham?
So Kotak Bank will be a sell. Yesterday we did see a breakdown, some follow-up selling should emerge. So target for the same will be 1410 with a stop loss at 1485.
Okay, a sell call on Kotak Bank, and amongst the 3 calls, Dabur is a stop call. Remember, clarification from Amit, his call is GSPL and not JSPL. Shubham and Amit, thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time this morning. And 9 seconds left for the markets to kickstart trade. Asia is a lot more greener than what the SGX or the pre-open rates were indicating. We'll start off flattish. The question is, can we build on from there? Let's wait and watch. For now, starting off flat, the Bank Nifty actually correcting a little bit. Yesterday, it cooled off completely from the highs of the day. Now about 1/3% lower, about 100 points. The mid caps and the small caps should come up on your screen as well. And there too, I reckon the start would be flattish. Yeah, I mean, in the green, yes, which is a good sign, but flattish in the session. The last 4 days, the small cap index has outperformed the large caps, about 1/4% higher for both of those indices. Let's get the heat map up on the screen and show you what stocks are moving and what is not. Yes Bank, 2.5% lower. Social media is along with the exposure that it has to that NBFC which defaulted. Maybe that's one more reason why the stock is down today. HDFC Bank down about 1%, SBI down about 1%, Eicher Motors and Kotak Bank about 1/3%. HUL down about 1/3%. So those are the few losers in trade. Yes Bank is the sole one which stands out. HDFC Bank too actually down about 1%. What is doing well? Kotak Bank, by the way, which was a sell recommendation, is also down. What is doing well? Marginally a few stocks. Adani Port about 1%. Dr. Reddy's gets their EIR about 1%, slightly less than 1% higher. ICICI Bank about 0.5% higher. Wipro, Tata Motors, Titan. Those are amongst the stocks that have done well. The market breadth now slowly and steadily moving towards the even Steven mark. Equal number of reds and greens, almost there. Equal number of reds and greens today, and not too many big losers. Just that. Watch out for Yes Bank. That starts off 2.5% lower in trade. But a clutch of mid caps would be in focus, Devi. Now, what is standing out for you?
We start off first with what's been happening with regards to some gainers. So marginal gains that have come about in some of these real estate majors. You've got the likes of Oberoi, which is starting the day in the green. Brokerage Properties also up marginally though. Other bigger gainers in the session coming in the form of ITDC, which is up about 9.5%. A big move, taking its 7-day tally. Actually, ITDC is up 50% in the last 7 days. Then you've got the likes of an Aban offshore, which has moved up. Z Learn 2 is up 3.5% this morning. Gati moves up. Gati has been active as well. Hathway Cable 2.5% higher. Adani Transmission, that's moved up. Lakshmi Vilas Bank, Spark, which off late has been on the buy list of quite a few technical experts, that's moving up again in this morning session. PI Industries, KRBL, Repco Home Finance was up about 4.5% yesterday, is open positive again in today's session, and Coromandel International too see some positive moves. Losers include the likes of a CG Power, seeing some dip in today's session. 1% Beverages, L&T Finance Holdings, that's down 3.5%. Piramal Enterprises down 2.9%, Deven Housing Finance, and Walk Hard 2.5% lower. Remember, the last 2 days the stock has gained almost 35%, so it's bound to have some bit of negative profit-taking reaction, but that's marginal at 1.7%. The broader market breadth, the color of the breadth is still positive. About 636 stocks have advanced, about 433 stocks have declined. Deven Choksey at KRChoksey is joining us right now on the show. Deven, thanks very much for taking out the time. Last 5 days, barring yesterday, seen a good move on the market, saw some bit of stabilization. What do you think is going to be the trend, at least from a near to medium term perspective, and what takes center stage now?
Good morning, Devina. Well, major things are remaining same. Nothing has changed per se, except the fact that if you see the detailed numbers in the corporate setup, they are not looking so bad as much as the noise is coming out in the open system in the media. So from a perspective of looking at the businesses of respective companies, be it automobile or be it any other segment in FMCG or consumer goods, I think the businesses are down, but I think they are relatively showing the signs of stability now than before. So from a perspective of looking at the future prospects in these companies, I find that I think with the good monsoon, with the clear-cut indication of government projects getting started and bank bringing down the rate of interest along with the stimuluses provided by the government and finance ministry, my reading says that I think we should be seeing the recovery in the system. Maybe I think with this festive season starting now to I think October to December quarter, we should be seeing some good amount of recovery in the system. So it's a basically I think a downturn which is getting corrected, and on the hopes of this downturn getting corrected, probably the market responded in last 4-5 days. Also the fact that I think the Americas basically talked with China at some point of time showing some signs of optimism, and that is also one of the reasons for which I think the market bringing some stability. But beyond that, as of now, I think for this quarter working, etc., I think the fundamentals haven't changed. It is more on an expectation that the market has started stabilizing and giving some amount of bounce back.
Deven, good morning. This Altico default, it's coming at a time when real estate was looking at some revival, and this is largely a real estate focused NBFC as well, but banks have exposure, mutual funds have exposure. Anything particular, anything big for any of the related parties? Have you studied it at all?
Yes, I was going to the list of the lenders. I think we have given money to them, and each and every name I think that you can think of has already given money to them, maybe in a small part or maybe in some larger part. I think you have total 3600 crore worth of I think lending given by the banks and the NBFCs to this company, and I think they are basically defaulting on 20 crore worth of installments that they are supposed to be paying off. I don't know, I think till the time underlying real estate business recovers, I think how many such victims will come out in the open space. That's difficult to take a call. Neither we have a very good clarity about I think how much is the lending secured by, as far as I think the lender's ability to recover the money is concerned, so that part is not clear. But I think the important aspect, as you touched upon, in the real estate space, I think when there is an expectation that things could revive, I think we are seeing one more victim coming out into the system. In my viewpoint, I think the real estate recovery possibly will emerge once I think you have a pay-per-use model which is more going to be clear for the residential as well as I think the commercial users, and then probably one could see and argue for I think recovery in the real estate. Maybe some small pain still left, but yes, it is troubling at this point of time.
The other bit is the last few days, the kind of moves that we've had in some of these auto names, Deven. Now, this jury is split, but I want to talk about two names, and if you would believe that they present a good risk reward. I mean, one is obvious, Maruti Suzuki. The other one, which is a slightly different one, Tata Motors.
So I think if you don't look at the results, I think which are likely to come in this September quarter, which are going to be negative results. If you don't look at those results, then probably I think you have reasonably good amount of confidence that the things could possibly improve. On one side, I think the Maruti has been, I think, dispatching higher amount of inventory. In a normal situation also, I think they would have an inventory with the dealer of around 25 to 35 days. In these days, I think these inventories have actually doubled, and that's a problem. But if you actually start looking at the retail sales and I think the overall numbers, I was going through this data and it suggests that in the overall auto space basket versus the last year August 2018 to this year August 2019, the overall auto sales including all category of products is just less than 5% at the retail level on the registration front, which means that I think the most of the auto companies probably I think ended up producing more and I think ended up giving that kind of inventory to the dealers, and which has probably I think magnified the problems. To me, I think if 4-5% kind of a fall in the retail sale is experienced, and if this is showing some kind of revival under the measures that we talk about, including the fall in the interest rate, including the depreciation stimulus that the government has given. So to a greater extent, my reading says that we should be seeing the recovery in the auto sales, and probably I think you could see some smart recovery coming first into the two-wheeler space, and then probably I think commercial vehicle space, and after which I think it would be the passenger vehicle. This is what I would like to think. So let us see how exactly it pans out, but I think as of now, the passenger vehicle companies are unlikely to show a great result in the September ended quarter. So it is safer to I think experience the result and then probably take a call on those companies.
All right, Deven, pleasure chatting with you as always and getting your thoughts on the show. Thank you very much for joining us this morning.
Thank you.
And Vikas Khemani, founder at Carnelian Capital Advisors, he's joining us on the show as well. Vikas, good to chat with you this morning. Nothing much has changed materially since the last time we spoke, except for the fact that the finance minister has come up with many more announcements and a lot of expectations for her as to what she can do for the remaining sectors that are plagued and that are bogged down by the economic slowdown. But from an approach to the markets, from a strategy standpoint, what would you be doing?
So I think we had a huge amount of pessimism in the market, slowdown in the economy, which also reflected in the GDP number. The good news is that I think government is taking note of it. They are responding in a comprehensive manner. I think in last 1 month, what we have seen from the government and especially the finance minister to kickstart or revive the economy, I think is commendable. Of course, lot lies in how efficiently they execute. And the implication of that would decide the pace of recovery. But I am on the whole I am quite sort of optimist now. I think the risk reward of investing in the market right now has come. Also I do believe that the pessimism is a little bit over exaggerated. I know ground level reality is not as bad as it is being also kind of perceived by the market. I can see that numbers in the consumer side improving. Also, I mean, June quarter numbers from the consumer side from volume perspective were not bad. September, I think anyway there are not many expectations from the market. I mean, most participants wouldn't be disappointed if, let us say, number comes bad because it's already expected. So I think and next quarter onwards we will start seeing base effect getting played out and impact of some of the festive season and some of the measures being taken by the government. So net I feel that all the pointers are in right direction. We will see a slow and steady improvement. We will see markets getting comfortable. Fortunately, the SIP flows also are very, very good. That shows how mature retail investor is in India right now, that in bad times they are continuing with the investment, and in fact it is getting better. So I think all these things according to me are pointing in the right direction, that one should look to invest into capital. We have started deploying capital. We were sitting on cash all this while. In last 3-4 weeks we have slowly started deploying capital in the markets.
And where would this capital have first preference?
I think first preference obviously would be into financials because we have had significant corrections out there, and also I think I do believe that when the recovery happens, it will be led by financial. We have had a significant dip in the drop in the interest rates. We have had significant dip in the credit growth, which will pick up, and as and when the credit growth starts picking up, it will have impact on the financials. And I think we are also looking at the plays where consumption, which could benefit from the consumption pickup, where stocks have corrected in the consumption basket, but as and when the turnaround happens, we will start seeing numbers picking up, whether it is building material space, consumer durable space. Many of those I think stocks have corrected 30-40%, and in some cases even more. And you will see a good growth coming back in many of those names. So we are broadly restricting ourselves right now to financials and consumption, but we are also watching out on the investment cycle as well, because we think that investment cycle is also going to get better as and when the credit kind of starts trickling down in the economy. So we are waiting and watching, but these two segments we are building right now our exposure.
You spoke about the capital expense bit, and the fact that the finance minister has said that they are probably looking at front loading some of the infrastructure spending. Does that materially change a lot of things in terms of the investment sentiment in the infrastructure space?
It does, Devna, but I think we will have to see how it comes down when it starts happening. We've been awaiting it for long. That would be a great move if they can do it, because I think right now, in absence of private spending, government spending on infrastructure and other capital expenditure would be a great move that would really give a much awaited breather to the economy. And we need to anyway build that. So if they can front load that, and I think and in the later stage even private capex can pick up. Right now we have an urgent need to kickstart the economy, bring back the animal spirits, bring back the confidence of the business people, of the people at large, and that will, I think, probably carry us far. So the government needs to do a lot of things at this point in time.
Because morning, Neeraj here, are you looking at investing in some of the larger names, because the belief, certain quarters of the market believe that with the cleanup process that is on, the benefits will come into larger, more established companies as opposed to small caps. Is that a legitimate view?
I think, Neeraj, it's a valid thought, and it is I think definitely trend which we are seeing across the segments and sectors, that larger will get larger, smaller and marginal players either who did not have, especially in times like this where the capital is scarce, you will see the trend moving forward in favor of larger players, and that's happening whether it is you pick up any segment, whether it is banking to real estate to any consumer goods company, and that will happen. But at the same time, this is a cycle. I wouldn't say that this will stay forever. In the same cycle, you will also see good smaller companies where they have a good balance sheet, good management team, also gets an opportunity to grow. And there are many more companies, and those such companies can even give threat to some of the established players. So you got to look at business model specific thing, but in general this holds true, especially in difficult times, and this we have seen in last 2-3 years. I mean, especially last 2 years when environment has been bad, good and stable players have been benefiting out of that. That can continue for some more time, there's no doubt about it, but I would say even real and bigger opportunity also lies in looking out those smaller companies which are good management team, solid businesses, and can scale up many times.
So the pocket that you like and the pocket that you liked, financials and banks. Now I remember a conversation about 4 or 5 months ago, Vikas, wherein you were, or maybe 9 months ago, wherein you were firmly in favor of the corporate facing banks, ICRA, Axis, etc. That tactical move has played out very well. Here on, would you still continue to favor them, or would you favor the more established or even larger high quality names, or are you going down the pattern and looking at the DCBs, RBLs and federal banks of the world?
No, again, that was Neeraj, not a tactical move. That I saw a big change happening in those organizations They were not only corporate facing banks, they were significantly largely retail facing banks as well. They had a mix, but I think the corporates was overweighing the overall banks, which has kind of petered out. And I do believe that these banks would continue to play out over the next 3, 4, 5 years. I would not be surprised if ICICI banks hit $100 billion market cap in about 4 or 5 years time. I mean, so I do believe that they are part of the structural growth driving. Of course, there were challenges in the past. With the change in the management, change in the entire strategy of these companies, I do not see baggage of the past impacting them much in the future. And the current strategy clearly puts them in a good path. So I would say that right now market seems to be liking companies which can sustainably give 18-20% return without growth, without much sort of setback. And corporate exposure gave them. So granularity is being preferred in this industry. So whether it is DCB versus RBL, or whether ICICI Bank versus SDFC Bank for that matter. So and that trend will continue. Wherever there is a granular exposure in the credit part, retail exposure is more, and retail exposure is consistently growing. I think those franchises would be preferred by the markets, according to me.
All right. So when you're talking about 17-18% growth, is that something that you're also factoring in terms of the gamut of industries, as in the earnings performance, the earnings growth expectations that anyways come off from 23, 24 earlier on, down to some saying even as low as 15?
Sorry, I didn't get your question. I'm sorry.
Your earnings expectations for the year, have you decreased the expectations meaningfully after looking at how at least Q1 has shaped up, which has been no big bang move in terms of the earnings performance, and the overall projection for the year? How low would you peg it for earnings performance?
So I think the earnings will be haywire, in my opinion. There's no point in looking at, because when the macroeconomic environment is so uncertain and daily things are playing out differently, we do not know what governments will do, what are the international scenario. So I think, in my opinion, predicting this year's earning growth is probably not a best strategy, and then investing on that. I think what one has to look at is that once the environment settles down, what a particular company, segment, or overall markets can deliver that kind of growth. And if you look that, and then evaluate your risk reward of the investment, I feel that would be the right way, because I don't think, given whatever the environment, one can predict or forecast precisely any kind of over next 3, 4, 6 months what will happen. Of course, I'm optimist that markets will probably not disappoint. Economy will not disappoint as much as markets are expecting it to be. There could be a bit of a positive surprise element out there, but will that be materially very large number from an absolute number perspective or growth perspective? I have my doubts, because I think we are still recovering from the aftermath of ILFS. Still lots of issues are there in the real estate sector, in construction sector, in SMEs. Unless they get sorted out, we will not see a structural big revival of the demand, but it is getting better. So I would bet, I wouldn't bet on a particular number saying this expected growth will come in or not, but I would say directionally it is getting better. I would rather bet on 2021 number, and can we get to a, let us say, 18-20% kind of growth. My bet would be, or my expectation would be very high on that. My probability would be, I would assign a very high probability on that.
Okay, Vikas, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts.
Thank you, Neeraj.
It's an important market voice. Vikas Khemani of Carnelian Capital Advisors. We need to slip into a break on the note that the markets are absolutely flat. So important to have the corporate conversations going. Falling truck rentals, a result of subdued economic activity. And what could be the outlook ahead? Chandra Agarwal of TCI Express joins us to talk about that. And later on, the expansion plans of Make Money Organics. The CFO, Gurjant Singh Chahal, joins in to speak about that.